Hey, my fellow property managers, Marc Cunningham with Grace Management. Well, what do you do when you're stuck with that vendor invoice that comes to you from the plumber for the big repair and you don't have money to pay the vendor invoice? Well, it's going to happen. If it's never happened to you, congratulations. But at some point in time, you're going to get stuck with that vendor bill and no money from owner. Big bill, no money. And so let me offer you 5-6 options, potential solutions, workarounds to keep this from happening and what to do when it does happen for you. So number one, and this is the most common thing I'm going to hear, that you're probably thinking, well, Marc, I just don't approve work to be done without the money. Like, what are you talking about, Marc? If I do my job and that bid comes in, I'm not going to approve it to be done until I get the money from the owner. And that is the ideal. Absolutely, I understand that. However, that can't always happen because sometimes it's emergency work. Sometimes the plumber goes out to the property and they say that there's water everywhere. There's water spurting out of the water heater. Do you want me to turn this off and replace the water heater? And you got to act. You can't be like, well, hold on. Don't turn anything off yet. Let me check with the owner and see if I have some money. So you're going to get caught in those emergency situations typically. Now for turnovers, for normal things, this won't become an issue. But this really plays into emergency situations for emergency repair work that was done. You had to approve it because time was of the essence. So when that happens, you've got another option. You can say, well, I'm just going to hold that vendor bill until the next month's rent comes in. Right? I got the bill on the 10th day of the month, and I've already distributed to my owner client, so I don't have any money, but I'm just going to sit on this bill. That's an option. I'm going to sit on this bill till rent comes in a couple weeks. Potential option, depending on how long you have to wait for the rent to come in. Is it a couple days? Fine. If it's a couple weeks, that may not make that vendor feel real good. Or what if the bill is so large that the rent coming in isn't going to be enough money to cover it? That presents a problem there. So then we go on to number 3, which of course is the obvious. Well, I just get the money from the owner. I'm going to call them. I'm going to email them. I'm going to tell them to log into their portal and submit an owner contribution so I can pay that bill. Absolutely a good solution. But every once in a while, the owner's going to say, just take it out of next month's rent. I don't have $3,000 for a new water heater right now. You'll just have to take it out of next month's rent. Well, Mr. Owner, I need that money. I'm sorry, I don't have it. Take it out of the rent. Now we're kind of back to square one and we're kind of stuck. So another option, you could simply pay that vendor bill yourself, kind of front the money. We want to take care of our vendors, and rather than waiting 3 months to get 3 months worth of rent coming in to pay for the new furnace that you had to replace for the tenant when the emergency situation happened and there was no heat in the middle of winter, you could just pay the vendor bill yourself, wait for rent to come in from the tenant the next couple months, and reimburse yourself. You say, well, Marc, I would never do that. I'm not going to front the money. Well, these are all just options that we're giving you here. There's no perfect solution unless we take number 5 here. Well, actually, this isn't the perfect solution. I'm getting ahead of myself. Another option, though, is to actually loan money to your owner. This is similar to paying the bill yourself, but instead of you paying it out of your account and getting reversed later, you could actually lend the owner money, not uncommon in our industry, to where you take some of your money out of your company, you put a loan into your trust account for your owner client, just like if you were a bank type of a thing, and then now they have the money to pay that. Now, I know several of you just jumped out of your chairs and you're screaming at your screen right now like, Marc, that's terrible. You shouldn't do that because you'll never get that money. And I get it. None of these are great options, my friends. None of these are perfect. That's what we're talking about, is how do you manage an unmanageable situation? This is not a problem to be solved. It's simply a tension to manage, and it's going to come up, so you have to think through it before you find yourself stuck. We do this, by the way. So before you say only stupid people would loan their owners money, we do. And no, we don't get burned very often, and that's just having a good relationship with your owner clients and taking care of them. I'm not saying you should do it, but it is an option that way. Or another option, you could say, well, you know what I'm going to do is I just pay my owners their money late at the end of the month. So that way, if the water heater blows up on the 10th day of the month, and I get the bill on the 20th day of the month, no problem, because I got the money from the rent from the tenant on the first day of the month, and I'm not going to give the owner that money until the very end of the month. So I've got a whole month period of the owner's money just sitting there in my account So if that vendor bill comes in, I've got a larger pool of money from which to pay. And then if I have to get it on, the tenant's paying the money again on the first, so I've just got a larger pool of money. Great option, but your owners aren't going to be real happy if you're sitting on their money for a long period of time, because you have to balance this with the opposite side of the coin, which is what we want to be able to do, is get the owners their money as quickly as possible. They don't want you sitting on their money, so that's a hard one to overdo. And then the last potential option is simply get a larger owner escrow reserve on the front end. Wouldn't that be wonderful? Wouldn't it be wonderful if you could have a $10,000 owner escrow reserve? It's their money, but it sits in the account, so when that big bill comes in, you say, no problem. I got 10 grand of the owner's money that I can pay out all these expenses to. That's hard to do. But in your market, you need to kind of gauge your market and maybe over time continue to inch up your owner escrow reserve. Now, there are companies out there that have no owner escrow reserve. So there's no right or wrong with these things. You have to decide from a business decision what works best for you. If you're doing an owner escrow reserve, I would encourage you, if it's been a few years since you've upped it, maybe it's time to bump that up. A $100 escrow reserve is meaningless. You might as well not even have one. You need to have something substantial so that when you get that vendor bill, you have some money to potentially draw from that way. Now, another option is to utilize a lender. So I want to thank the sponsor for this month's video, LendingOne. LendingOne is a resource you need to have. You need to have this company. This isn't a vendor that you sign up for and pay them money to. No. We want to be viewed by our owner investors as not just property managers who fix toilets, but we want to be viewed as resources, as asset managers. And one thing that all owners will need at some point in time is a lender. Now, the nice thing about LendingOne is they're exclusive for real estate investors. They don't get caught up in all the red tape and all the junk that banks and credit unions have to do when they lend to owners who live in the property, and then they try to work with investors and they've got workarounds. LendingOne is exclusive for them, which means they can do portfolio loans. It means they can do new constructions. They can do refinance cash outs. They can do fix and flips. They work with a full suite of products under the umbrella of investment property. And they're going to give you an exclusive link for you to share with your owner clients that you can say to them, hey, I've got a resource. It's just a resource for you, Mr. Owner. And they pay out referral fees potentially to you that way. Reach out to the folks at LendingOne. These are great. We're going to be utilizing this with our owner clients because we want to present that option to our owner clients. If they don't use it, fine, but you need to present the option. It makes you look more valuable in the eyes of your owner clients. So we'll link, jump out, get a demo from LendingOne, and be more of a resource for your owner clients. So 2 final recommendations with this idea of running out of money but having a bill in place. Number 1, my recommendation is pay your vendor. Like, what you can't do in this situation is be like, hey, sorry vendor, I don't have money from the owner yet. Yes, I know it's been 60 days since you did the job for me that I asked you to do, but the owner just doesn't have any money, and so I'm just going to make you wait. I don't view that as an option. It's not an acceptable option. You've got to take care of your vendors. Whether that means you do any of the things we just talked about, whether it means you front the money, don't burn your vendors because the owner doesn't have any money. If you do, you're going to burn through all your vendors in a very, very short amount of time, and they're not going to do work for you. So I don't think that's an option. Always pay them, and always pay them quickly. And recommendation number 2, and this is probably the most important thing I'm going to say, don't commingle your owner client's money. Another accounting term is called diversion with that. So here's what you can't do. You can't get that bill from the owner or from the vendor and say, oh, it's $2,000. And that owner client, I don't have $2,000 of their owner client money, but you know what I do have? I've got well over $2,000 in my property trust account total, so no problem. I mean, I got $5,000, I got $10,000 in here. I'll just pay it and we'll make it up over time on the back end. Because what you're doing from an accounting standpoint is you're using a different owner's money to pay that vendor bill, because that owner only had $100 of reserves in your accounts, and you paid a $2,000 bill and you just kind of used money from other owner clients. That's commingling, that's diversion. Imagine a pair of handcuffs. That gets you in jail, my friends. That is not an acceptable option. So never, ever, ever pay those bills unless you have hard money from that particular owner client in order to pay it. I hope this kind of gets you thinking about different options that way. Jump on our website, PM Build, if we can be a resource to you. Check out, by the way, if you haven't joined our podcast, we've got a fascinating, I think it's fascinating, but it is me. We've got an interesting podcast this month on this type of topic as well. Think you'll find it interesting. Anywhere that you listen to podcasts, you can find that. But until next time, and as always, my friends, I wish you success.